Today, we will introduce the Volland Academy, Jason's new educational addition to his great platform. We will walk you through this free offering today on Risk Wrangling Derivative Desperados Traders Workshop. Let's get to it after the bell. Yeah. He wants in the hat. Yeah.
Oh, Derivative Desperados. Look at that, the Superman on your shirt.
That's right. Well, Lex Luthor. I was the villain in Superman. Hey, it's been a while, right? I haven't seen you a little bit, so at least live.
A couple weeks.
Yeah, we've been on the travel circuit. Although we did one from Palm Beach, which was fun.
Yeah.
For the OIC. That was a great turnout. So that was good. Anyhow, let's get to it. So you got a new product. Before we share the screen and go over it, tell us a little bit about it, how we get it, yada, yada, where we go, etc.
All right. So first of all, this is based on popular demand. We have been, people have been peppering us saying, look, I understand your data is really good, but I don't know how to use it. I don't know how to read it. I don't know really what it means. So a first step into kind of bringing, these high order mathematical concepts down to earth for, practicality purposes is to educate you about what all of this means. So we on Volland, it's on the www.vol.land/academy. We have made a learning management system called the Volland Academy.
Okay.
And it's about 30 videos. Some of them are kind of introduction videos. Many of them are talking about the Greeks, statistics that we have at Volland, and a little bit of trade planning, how to actually trade this stuff. So that's what we built, and now it's available on the Volland website.
Yeah, okay, that's great. And the critical word that I try to highlight in the opening is free. Is that true? It's free for Volland subscribers, I'm assuming.
Nope, it's free. You do not have to subscribe. It is completely free. You can join, you can not subscribe and still come in and go through the whole academy. So
okay.
It is strictly for educational purposes. Obviously, it's very Volland heavy, but yeah, it's to teach everybody, kind of in kind of modular little videos with little quizzes at the end.
Okay.
How exactly to read Volland and what these second order Greeks are all about, etc.
Right. So give me the website www.vol.land
/academy.
Academy. And it's, tell me if this looks right. Hang on a second. Ready?
That's our boy? There it is.
That's it, right?
That's it.
Would you look at that? Hold on a second. Let's see if that baby scrolls. How do I do that? Add banner. I don't know how to do it. Luis, you figure that out. I don't know. I don't know what I'm doing. It's supposed to scroll. I don't know how to make it scroll, but we'll figure it out. All right. Well, that's good. So everyone go there, sign up, and then everyone's going to learn how to read this data, because it is, I don't want to say it's heady. I guess it is heady. Yeah. But that's okay, because quite frankly, options are not necessarily easy. Once you get some basics down, I think all of a sudden the light goes on, right? And I always like to say, you don't have to know how to make the stoplight. You just have to know what it means. And that's it, right? That's all you need to do. So this is what I think the Academy will do for the data that you present. Yeah,
that's right. And also, just so you know, the Academy is a little bit more advanced. Like, we're not going to go over what a put is and what a call is. We do go through the Greeks, but we don't, we don't have like a introductory. You can get that anywhere. There's, plenty of courses everywhere to talk about that. This is strictly kind of the things that Volland focuses on and how to use it.
Got it. Okay. That's great. So incidentally, you brought that up. Let me give myself a plug, and Tradier in the hub. I threw out hub.tradier.com for folks. If you want to know what a call and a put is, and we did a series on 0 DTE, I am in the process of producing I'm going to call it 12-part mini series of options education. Okay. Now, Jason might be a guest host. Mark Phillips might be a guest host. I'm doing it with OIC, which is the Options Industry Council, and the CBOE. So we're going to do some cool things. It's going to be, fairly basic, and we're going to take people through the basics of options and learn some things. Toward the end, in the advanced section, we'll have some of this stuff as well. That's when Jason comes on. So look for that coming soon. It's behind the subscription wall at hub.tradier.com. No big deal. It's just an email. There's no pain, no nothing. And we will be posting our newsletter there. You can subscribe to that as well. So make sure you sign up for that because all kinds of great things coming. Anyway, let's get busy with Volland Academy. Let's see it.
Yeah, the Tradier Hub would be a great place to get some background, and then you can come to the Volland Academy.
Perfect.
So we have 5 different modules here.
Okay.
Module is about 5 to 6 different videos, right? This is just introductory. It kind of gives you an overview of what Volland is, kind of gives you, that kind of thing. This one right here stars somebody else who's on this show.
Oh, look at, I'm in there.
Mr. Lex Luthor. I have to tell you, Lex.
Yes.
So far, I mean, this we've released this on Monday, right? Okay. And so today's Thursday. So far, this video has gotten the most comments. And all of them are basically, we want more Lex.
Okay. Well, I'm happy to do it. Listen, let me just say I love to hear that. Thank you, everybody. But I did this for a living. Okay. So I did it for 30 years practically. So I've got all kinds of stories and all kinds of details about the dealer, things that we haven't even touched on yet. And Jason is very keen on this. So he's done a great job compiling all this stuff. I can certainly lend color and some colorful stories along the way too. So there's a lot of things in the back room that go on in the dealer world that are interesting, and none of it is suspect to you, the retail trader. They are not in that business. So we talk about it in that video. So I'll just leave it there for now. But yeah, we're going to do more of that, I think. Right?
Yeah. There's been a lot of. I have actually 3 requests. There's nothing else in the whole academy has said we want more of this than we want more Lex.
All right.
So
you got it. I'm in.
So we got to give the people what they want, right?
Yes, sir, for sure. Anytime. Okay. Great. Thank you for that.
So yeah, this is an introduction, and then we talk with a new customer. Then we talk with Lex about who the dealers are, what they do. I put a little shtick in there, but I think the next time, I think we would love to hear some Lex war stories.
Yeah, there's some good ones. I'll tell you, there's a ton of them. They're endless.
We talk about why not Jex, why gamma exposure is the naive way is not a great way to look at the options space. Our white paper, we give like a kind of overview of it. This is like if you were assigned to read To Kill a Mockingbird, this is the movie instead of reading the book.
Okay, got it. I love it.
And then this is just a tour of Volland with our front end guy. So
right. Okay. So where do you think people, your users or anyone looking to use it, where do they find the hurdle? And I don't mean that negatively. I'm talking about from the learning side. Because again, look at when I traded, second order Greeks were intuitive. It didn't have a name. There was no such thing as Vana and Charm. It didn't exist.
Right.
We knew what it was intuitively by moving our machines around and moving implied volatility up and down and the date forward and backwards and all that. That's how we figured out. We didn't know what to call it. We just knew what would happen.
Yeah.
So, relative to that sort of concept, do you find that people stumble over certain concepts in learning this or not?
I think the biggest concept to learn is Vana. I think because we emphasize it so much, we found how critical it is to dealer position, because as you said, the dealers don't hedge Vega a lot, but when that Vega turns into deltas, they're hedging it. Yep. So, Vana helps describe that. And it's a hurdle to try to get over a lot of the behavior of Vana because it's not like gamma. Yeah. It's not, so it's very difficult for people to conceptualize that in their mind. But kind of like what you said, I don't even think you really need to know how the stoplight is built. Just,
Yep.
follow the instructions, right?
Yeah. No, I
And I
agree.
think,
I'm a big fan of that. Yep.
yeah, and I think, and especially to start, that's a really great way to go about anything here in
Yep.
Volland, is just know the instructions and then move. And this will give you the instructions on each of these,
Yep.
on each of these Greeks. You know, we show the delta and kind of how we build the aggregate delta hedging statistic, gamma, which everybody kind of knows all around about already, but it shows, you know, because we're not using JEX, it can be like up, down, up, down, up, down. And so we go with an aggregate gamma approach. Vanna, we talk about that a lot, but you know, you could watch these videos and understand kind of the basics of the Volland perspective of these Greeks.
Okay. Terrific. Terrific. Do you go into some of the do you go into, how would you describe, I was reading a paper on this the other day, and I was actually watching a video, YouTube video, and I can't remember the person who did it, but it's pretty good. Speed. So
yeah,
there's another fancy name for it. It's like D something,
D gamma,
D gamma or something like that. But
yeah, so speed is the next derivative of gamma. It is showing what the gamma changes are for every move in the underlying.
Okay.
And it is, I think it's a big deal if you are trying to identify areas where gamma will, you know, really take hold. But you know, aggregate speed, to me, we tried doing some studies with that, and I think it's helpful in certain situations.
Right.
We can introduce it back in Volland, but we found it's mostly flat, except for like little blips. In like yesterday, you would have probably seen a little bit of a speed blip. But I think speed is a good identifier of when gamma would be most intense.
Okay. Got it. Cool. All right, and these are all videos, right? You said
so when you enter one of these, you will see a here. We'll go to the Lex Luthor one. Okay. When you enter it, there will be a video up here that you play. Right. And yeah, what a great screen grab YouTube did. Thank you, YouTube.
Look at, my eyes are closed.
My face is way worse than your eyes.
I know, right? Then you could watch this, and then you can take a quiz.
Then you take the quiz, and when you take the quiz, you have one shot at getting a point. So you answer the question, right? What is the primary function of market makers? You answer the question, and you get a shot at taking a point. In the near future, we're going to have a leaderboard on who's got the most points, you know, all that kind of thing. And on our side too.
Is it? Oh, it's 1 of 4 questions. 1 of 4. I got you. Okay, cool. Yeah, that's a great idea. I love anytime in the options space when you can gamify learning.
Yeah.
Right. And
also on our side, it helps because we can look at the questions that people get right and the ones that get wrong. Right. And you know, a couple months from now, when you say what is the greatest hurdle, I can actually give you a quantitative answer. Okay. So, you know,
listen, I know we're being a little bit silly, but I think that's important. And you know, we on our end are trying to figure those sort of things out, because, you know, we obviously, being a brokerage, we have platforms, we have mobile, we have web, we have desktop, we've got, you know, all these concepts, we have educate. We want to know where people, you know, want to be led and taught, because we think we know, but guess what? Maybe we're way off. And you know, I'd love to have some comments from folks watching. You know, what kind of things are important to you to learn to become a better investor of your money, trader of your money, so that you become successful. You know, we don't have the exact formula that's going to make you successful. Okay. I can tell you from discipline what things I did to be successful, but everyone's different. There's no formula. You have to get in there and get in the swimming pool and take a few gulps of water once in a while and go under and get up and get to the edge once, you know, and figure it out.
And that's why great. Yeah, that's also why one thing I really kind of dislike are services where somebody's like trading in front of you and you're supposed to try to follow their trades. You know, go long, you know, Amazon right now, you know, and then because then number one, you're not learning anything. But number two, you have to sit there and track this one person, you know, really closely and have some kind of hair trigger of the execution perfectly. And you don't even know why you're executing something. So if the person's wrong, you don't know when really to get out or what the thesis is. Is the thesis changing? What's going on? You know, that kind of thing. So yeah, I kind of think those services do a disservice, and that's why I talk about the data, but I don't, maybe sometimes I'll generally say, hey, go short gamma, go long gamma, do this, but overall, that's why I like, I present the data, you can do it the way you see fit from a risk perspective.
And the other thing, not maybe the last thing, but one other thing I'd add, excuse me, is everyone, I think, who trades, whether you're professional or retail, has a personality that a strategy will behoove or inhibit.
Yep.
I was not very good at being long premium and paying theta. That's how I was taught. I thought it was the way to do things. I could not make a nickel doing it. I struggled. Okay. I was the exact opposite, and I had to sell premium and figure that out, which I did, and it worked great. But I have colleagues in the industry who are long premium guys. Mark Phillips is probably one of them to some degree. He did very well also, but he was more on the long side of that, of gamma and paying theta. I don't know what to tell you. It just didn't fit my personality. It wasn't for me. Right. Yeah. So you got to kind of manage that a little bit too. Find out where you kind of sit best. You know what I mean?
Yeah. I mean, some people don't even like options. They just want to trade the futures or trade the underlying stock.
Right.
I tend to think I'm like more of a long gamma, short gamma. I could do both, but I prefer long gamma, and I can't stand just buying the stock. Like I feel like that. I'm not a Delta One guy.
No, that's a good point. We, look at in the edge game on the market maker side, stock has zero edge to us. We don't care what the hell the stock is or what it does. And I guess I've said this all the time. There are so many stocks. I traded hundreds of them in my day as a hedge. If you ask me what did DoubleClick do back in the day, I say I have no goddamn idea what DoubleClick did. Zero. Okay. All I know is it was 100 deltas every time I bought 100 shares, or it was short 100 deltas when I sold it, and I used it to hedge my options. It was a parking spot for deltas. That's all it was. Right.
Yep.
And what would I rather do? Trade another option with me that's the opposite of what I just did. And then I'll hedge both sides and get edge on both trades. That's, beautiful. Or take me out of the trade I just did and have nothing on and it's in the bank and I got edge on both sides. That's the best.
Right. That's the ideal.
That's the ideal. That never happens. And that never, sometimes it does, but not very often. So you need to hedge, right? We needed to hedge. But stock for me, it was an expense, right? It was an expense. I had to pay a commission on that, quite frankly.
Yeah.
So, yeah.
This one shows some of the more advanced kind of widgets of Volland.
Yep.
It's derived statistics and stuff from our these are a little bit longer, but these are derived statistics from the way we collect our data. We have the screener, we have spot vol correlation, and then we have like a bunch of statistics widgets. And it's just kind of an overview on how to use those.
Awesome. I love it.
And then we go into, these are just like my option swing trade plans.
Okay.
Just general plans. I don't, I'm not telling you what to do. It's not investment advice. This is just, when I do a short gamma vertical, I have a stop. I have these are the trade plans that I have.
Right.
Long gamma vertical, I don't have a stop, but I put in the money that I expect to lose. So it's like, what percentage of portfolio should you be using? That kind of thing.
Do you have a rule of thumb that you like to use for how much of your equity you put at risk in any one strategy? I'll call it a strategy for lack of a better term.
Yeah.
So if you're going to do an iron condor, I'm just making this up. How much of your equity, let's say it's 100 grand, just make it a round number. Is it a two? I always lean toward 2 to 5%. Some people are on the 5% end. Some people on the 2% end. Somewhere in between probably works. Do you have a strong feel on it?
At 2 to 4 is what I would do. Most long gamma plays.
Yeah. Yep. Okay.
2 to 4. Okay. And then for long gamma plays, about 50 bips.
50 bips?
50 bips to 100 bips. That's
the end of the cheese.
Yeah.
And the cheese starts smelling like what.
Yeah.
Okay. I won't say the word ass. I just said it. God dang it. I wasn't supposed to say that. All right. We got to wipe that one out. Okay. So what happens when they take the quiz, or I'm sorry, not the quiz, when they go here, they learn all this stuff, they're interested, they can sign up, right? They can
just go to home and you sign up. You go to subscription and then you can sign up and there you go. And you can now, you could go through the academy 800 times. You're not going to get it until you practice. And typically I do I say like 2 to 3 months of, low risk, learning, like find the trade plan that you're comfortable with. You can even conceptually come up with a trade plan. Until you're in it, you don't really know it, Sure. You don't know if that's really for you.
Yeah, 100%. So, okay. Did you know? Well, let me ask one more question. We got to get going here, but one more question, and then I got a comment. You mentioned trade plan, okay? And I deal with a lot of our educators, in our space and our ecosystem at Tradier. There's tons of them. There's all kinds of great ones, right? Everyone has a little bit different trade plan, which is fine. But there's a lot of consistency to the successful people, and that consistency to me is the trade plan consists of an entry, an exit, right? And the discipline to manage all that is super important. Some people would argue, and I don't disagree with them, that the entry and exit should be known before you actually even make the trade.
Absolutely.
Two most important points. Where am I getting out of this thing? Should it go good? Should it go bad? Before I even hit the send button. Is that something you believe?
Absolutely.
Okay.
Absolutely.
Right. And there's all kinds of nuance in between, right?
Yeah. Entry, exit, and stop if necessary.
Well, I consider that part of the exit. So good, yes. So a stop and a profit and entry. Okay, good. So folks, really, those are things that you can hone your skills on, right? There's so many entries. Entries are easy, and I used to teach to our traders on the floor when I was teaching. I said, look I can hire a chimpanzee to put a trade on. Okay, it is the easiest thing in the world to get into something. It is the greatest skill to get out of it, right? Because you're always going to guess a little bit like, I had more juice on the table. I wish I had let it run more. That's a bad answer. Holy crap. I wish I didn't get out. It bounced off my stop. I got out and it ran up for a profit. Oh no, I suck. Another wrong sentiment. You can't look backwards like that, right?
The emotions of looking backwards are the worst.
Yeah,
it's something you have to get over. Like I had to get over it too. Yeah. Even yesterday, yesterday we had that bad, 20-year bond auction and the market sold off. And I had to decide, like the whole way down, I'm sitting there deciding, is my thesis changing? Is my thesis changing? Like that's, when I'm sitting there trying to decide whether to get in and out and the spreads are blown out and stuff like that, you're like, is the thesis changing? And that's, when you kind of have, that's really where the emotions you could end up making suboptimal trades because
I agree with that. I agree with that. Good. All right. Anything else before we go?
No, you said we had a comment.
No, I had a comment on something.
That was your comment.
Yeah. So make sure you go here. Can we run that banner again? Vol.land
/academy.
Here it is. Vol.land, dog barking. Vol.land/academy. Make sure you sign up, man. I'm a big fan of education. Don't forget, we're going to be doing that 12-part mini series. I think we're going to have all kinds of folks involved. Some of our hosts from the week on the hub are going to be there teaching some things. Jason, I think you want to be in. I know Mark is. There's all kinds of folks who want to participate. We are happy to have you. We want a great group of personalities. The other last announcement I'd make to folks is when you sign up for the hub, and the sign up is just an email, there's some fun things coming. Actually, yours truly is writing a book.
You know how to write?
I know how to write. Holy cow. You know how with artificial intelligence nowadays, I don't have to be intelligent anymore. No, there's a book coming out. I'm not going to give any clues away. It's a little bit off still. It's a few months out, but it's going to be on Amazon. It's going to be free to subscribers. So it's going to be interesting. It's going to be very different. Okay. It's not going to be what is it called? What does it put necessarily? It's going to be a little bit more about that personality thing of what strategy suits you best. Are you a chart reader? Are you a premium seller, premium buyer? And here's how you figure that out. So stay tuned for that. A little plug for Uncle Lex.
That is, I'm excited. I want to know what this is.
And guess what? I'm going to throw in a little Von and Charmin on your behalf too, right? And give you full credit. Because you invented it, right? We didn't know this stuff.
Oh, yeah, I totally invented it.
I kind of wish you invented the term too, Von and Charmin, because that would make you look way cooler.
No, yeah, I actually a lot of the concepts are in a it's this like the Vama concepts too.
Yeah.
Colin Bennett's Trading Volatility. It's one of my favorite books for options.
Yeah.
That's an oldie, but it's a great one.
Yep. And by the way, I keep saying this last note, but I keep thinking of things. We're going to go. This is also kind of cool. So I went back to an old colleague of mine. I met him at OIC. He was our quant at our trading firm, and he was brilliant. He still is brilliant. He sat on a panel. We caught up, and he wrote a piece for our system back in the trading days. And it was what our discussion was several months ago about implicit volatility, implied volatility between 2 months, especially during earnings when one's really high, one's really low, and what the computation is. He wrote a paper for us, and we put it in our systems way back then. I said, you still have the paper? Guess what? He found it. He says he never removes things, sent it to me. We're adding it to Tradier Pro incidentally.
Nice.
So that when you do a spread, it's going to spit out what that implicit volatility is, so you can look at historical implied and measure, is this a good purchase of this time spread or diagonal during this earnings month? Is it cheap enough for me to do?
That's great.
Yeah. Stay tuned for that. Okay, we got to go. Jason, awesome stuff. Love it. Vol.land/academy. Sign up, folks. It's a great service. Use the bomb. We will see you next time on Risk Wrangling, Derivative Desperados, Traders Workshop.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.